And that risk on Europe, risk off Europe story we experienced in 2012 made a bit of a comeback yesterday as far as the bond market and the FX market was concerned. What did you make of it?
Morning, John. It's interesting, isn't it? But certainly the bond market message and the FX market message looked vastly different. I think the bond market looked actually quite confused. It didn't really know what to do. Basically, Draghi told us that some unwinding of stimulus is coming, just not quite yet, but that he still sees, inflation sorely really lacking in terms of inflationary pressures. And that's quite different to what we're used to hearing from most central banks, including theirs. And I agree with Richard, the FX market certainly reacted strongly to the fact that he was questioned directly about the euro strength that we've seen so far, and he made no efforts whatsoever to push back on it, and really said there is no level that they target, and that's something we hear often from central banks, but a good opportunity to jawbone it lower he didn't take. I think actually the relationship between euro and the equity market is an interesting one, because you don't tend to find that an equity market that sources a lot of its revenues from outside of the domestic region reacts well to a strengthening of the currency. We've seen this after Brexit. Sterling falls, even if people have got bad growth forecasts, the equity market still does well. So actually we've seen the Euro stocks ticking lower for the last few weeks, because really Euro currency strength is not welcome for a lot of the companies that make up that index.
The FX market seems to be driving everything. Vassili, is that what we needed yesterday? Did we need President Draghi to come out and say, I don't like 116? Is that how explicit he needed to be?
The question is, would it have worked? And I think that's actually quite a key point here. So 115, 116 was a bit of an important level. This is when the ECB turned more dovish in 2015, pushed the currency lower. Again, it was a bit of a top in 2016. But things are very different right now. The ECB is not easing policy. In fact, the market perceives that it has an asset scarcity issue, so it really doesn't have a lot of room to ease policy. And if there's anything we've learned, over years and years of watching central banks trying to manage FX, it's very difficult to push FX in one direction when your monetary policy is moving in an opposite direction. I think Draghi understands that very well. So I think it's been said before, it makes sense to keep the powder dry a little bit. Yes, as the move continues, I think if we get closer to 120, I think the language will get more explicit. But I think there's an understanding that if we're about to tighten monetary policy, it's going to be hard to keep the currency suppressed.